Hello everybody, this is the Crypto Dolphin again. I'm glad to say that I'm back after a long while of not being able to do anything or actually like operate in the market. I'm finally back. So today I just want to do something different. I'm putting some music now. Just want to do like one of these technical analysis sessions and chill. I'm gonna do a review of the whole market. That includes both crypto market and other markets as well. So with that said, I hope you enjoy what I've got to say today. And okay, so here we go. First of all, I wanted to talk about how everything's going. I usually have this organized in a way where it's easier to see, right? So give me a second so I can delete this over here. I'll delete this, I'll delete this, and I think I can delete this. And I'm gonna go with my usual indicators, or oscillators, really. Stock RSI. It's actually my favorite oscillator, but there are others that are really good. Okay, so in regards to the crypto total market cap, right? You guys know I'm always checking the total crypto market cap because I feel it's a much better signal than anything else in the market. Usually you'll see maybe ETH, maybe BTC going up, going down, and it just creates noise for us. So what I do wanna analyze is basically total crypto market cap, right? It's the first thing that I always analyze, and I'm kind of organized in the way I set things up on TradingView. So, okay, this is the same thing that we've been seeing for a long while now. Ever since that huge fall, we fell $1.38 trillion, or 53% of the market basically. And since then, we've only been doing lower highs and lower lows, right? This is something to worry about, honestly. So I'm still not macro bullish on anything. For us, in my theory, in the way I see the market, I would not be like full risk on in the market unless we start getting like higher than this range over here, right? Until we at least close a daily candle above a retest of 1.65 trillion dollars. Until we don't get above this and close a candle above this, like here, but on continuation and strength, then I'm not gonna be macro bullish. Here you can see my EMAs, exponential moving averages. I use EMAs and not simple moving averages because crypto is on every day, every hour, 24/7, right? So since it's a market that it's not as liquid anyways, so it really moves fast, I'd rather use exponential moving averages instead of simple moving averages. Personally, I've had better results with that. So right now, this is where we are. I do have this arrow over here pointing at how the volume has been going down, right? Which implies that there has been less inflows of new money into the system, or money, right? Ever since that fall, we've been steadily going down. Other than that, we had a support over here that we had created at about 1.38 trillion, which coincidentally corresponds to basically the same amount that we lost, right? So it's basically like the market, the market wanted to hold that 50% level. In other words, more or less, the market wanted to hold that 50% level, and not that 53%, but that 50% level, and it became support. That support, when we fell on this last fall, that it was on June 21, which was a week ago, 10 days ago basically. We fell below that. We even fell below the time where we fell the lowest since the big fall, right? Which would imply like a severe loss of support. We've been getting a little bit bullish ever since then. This is a bullish structure. You usually get that. So you go below support, people want to buy. We get this indecision doji candle. So then we go up. We made that previous support. It became resistance. We couldn't close above it. So that's how we had these two candles. This is it's not a bullish pattern. It's actually a bearish pattern. A 3 green soldiers or whatever. Like, I know there's a funny name for that. But then we have like this W's, like it goes below, breaks support, it heavily goes up, then it goes down again. It bounced exactly from the point that we had signal before, and then it's been trying to go up, but it's failed at trying to regain the 200 EMA support, which has now been acting as resistance in not a good way. Besides that, we also have we are in an oversold status right here on our stock RSI oscillator, which basically indicates that there has been less people buying at higher prices, right? So it's overbought. It's overbought here. It's overbought here. So what tends to happen is that it falls, and we can backtest it how many times you want. Like if you go here, you'll see it coincide with this fall. If you go here, it coincided with this fall, like this M over here. If we go over here, it fell right through here. If we go here, we did have like some growth here, but when it started falling right here, when we get the bearish cross in the stock RSI, we have a huge fall, right? And that's where we are right now as far as total crypto market cap. Then we can basically check what this is, which this is the total 2, which is the crypto total market cap, excluding BTC market cap. It's usually a good indicator of what's happening, and yeah, like where we're going, where we're headed. So let's go and put it on the weekly. This was the 2014 top, and this was the post 2014 accumulation, which gave us this absolutely insane growth of what 310,622% growth, which was basically 475.341 billion, right? $billion in growth. That was this accumulation, and that was the result. This was the top of 2017-2018 era season bull cycle, and this is the post 2017 accumulation. And so far this has been like our results. They haven't been like the best, but you could argue, like, if you really want some hopium, you could argue that this retest of the 50 EMA is actually this one, and that we still have much more to go. There are macro situations on that lead me to believe that this is not the case, and it's also the fact that back then $475.341 billion was what was needed, but right now we would need trillions and trillions of dollars, which is not as easy to find, right? Unless like the whole world jumps into crypto and into alts, which is something that I highly doubt is gonna happen like this fast. So that's something to take into account. I'm using logarithmic scale over here to show you everything. Why? I've talked about this before, because we're seeing exponential growth, right? So exponential growth, logarithmic scale, it makes it easier to view it all. If I put it in linear, then it's hard to discern any pattern or growth there. You'll also realize that this structure over here is pretty similar to basically everything, mostly ETH. Like if I go ETH, it's very similar. Like boom, 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 boom. Then we have boom, boom. Well, like we can actually show it like this with a line, so it almost coincides like perfectly, right? And then we see how it goes, how it leads, and what's happening right now. So yeah, you could argue this is a pretty nasty head and shoulders, and that head and shoulders is just like having a retest right now of this place right here. You could argue that. I'm not gonna discuss about that or spend too much time on that, but you could say that we're on a head and shoulders, and this is the neckline, and everything that we've been seeing the past week is basically just a retest of this neckline, and we might be like going to Goblin Town or do a heavier retest of 50 EMA on weekly candles. Other than that, I think it's important to know and to see what's happening regarding USDT or Tether. Tether is basically the biggest stablecoin, and it moves the whole market. Without Tether, there's no market. It doesn't matter what you think. It doesn't matter what I think. It doesn't matter what we believe. That's the truth. This is what moves everything. There's not enough like on-ramps into crypto. Even if you think so and you live in the first world, that it's not the truth. Like the whole market needs the speed of a proxy stablecoin, and that proxy stablecoin that we chose was Tether, and it represents a huge amount of a market cap, of the market basically. We can see that ever since since May. Okay, these over here, this like heavily wicked candles. These ones are when when everything started to fall. Why? Simple. People getting liquidated means that Binance and all the different exchanges needed, like they really needed stablecoins to pay everybody, and to be able to have a reserve and have enough cash to pay all the different of the different positions, both long and short and everything in between. That's why we had heavily prints, but they were down. It was basically a gap that closed up, right? And you see those hammers. This is what we call hammers in as far as Japanese candlestick names. I'm not too fond of the names, but I'm just doing my job and doing a review of everything in the market. So far we've had a whole month of absolute flattening of stablecoins. What does this mean? This means that I'm personally not thinking that we will have anything until like we get to print more stable coins, more tether like we usually do, or until new people come into the market, right? Until new people come into the market, or until we literally print more tether out of thin air. And that's just something to take into account. There's also something else that you should know. So this is USDT dominance. We can see the USDT dominance is more or less the inverse chart of BTC. It's literally like the BTC chart but upside down, right? And what does this happen when the dominance is going up but we're not printing more? Easy. People are selling. People are selling their positions to go into stable coins, and that's what we can infer from this. It's quite easy, honestly, to get conclusions out of that. Then after that, we can see that everything coincides. Like and this is obvious. Like I shouldn't be saying this, but this is obvious. Like we've been having a couple days of bounces between BTC and alts, which is something I personally don't like. Any major bullish push should be BTC focused first, and exclusively, and then go to alts, because if both go up at the same time, then they're excessively susceptible to anything that could happen to BTC. So if BTC dumps, then guess what? If BTC dumps, then all alts dump. And you could see this quite easily when you start analyzing different alts and how they were reacting. For instance, if I wanted to look at something like RUNE BTC, RUNE BTC has an ridiculous beta with BTC, which means that for every move that BTC does, RUNE does it like quite the same, basically, and tenfold. It really why? Because it's less liquid, so the movements are more pronounced. You'll see my RUNE BTC chart looks like a mess because I was using mostly like 4-hour candles, but it was hitting every target like on the spot. It was perfect. I really loved adding to my position on RUNE throughout all this market. Basically, I started my position on RUNE over here, which would imply something like over here. I started my position here at 4.6 more or less, and I sold most of my position around here. Because why? Because okay, this is not a bullish structure, like ascending not broadening wedge, but this ascending wedge is not a bullish structure. And I started to think, okay, this might be it. So if we break this support over here, because it was this top, right, and it coincided with support with different candles over here, I said to myself, okay, if we break this, I'm selling. And this is the point where I sold everything. And in RUNE, like 16.5, 16.6, more or less. That's where I started like selling everything in RUNE, because I had my stop loss over there. I started creating my stop loss like over here, because I thought that this was gonna be the capitulation candle and not this one. And okay, that's what happens, right? But yeah, that's more or less what I wanted to talk about. USDT, USDT, like Tether and stablecoin printing, its relationship to the markets, total crypto market cap without BTC, and then total crypto market cap with BTC, and how does that translate into words. Like you can see, there's not new money coming into the market, which is something to worry about, because if not, we're basically and quite literally just pumping and dumping between each other, and we're getting a lot of exit pumps in a lot of alts, and a lot of alts that you can see. Mostly you can see it in Korea. Why? Because Korea has like stronger regulation right now, and the kimchi premium is gone, so their losses are even higher than ours, which means basically that the bigger whales in Korea, they're deep underwater, so they're pushing a lot of smaller cap alts and scammy alts. They're pushing them to have like big bumps, mostly derivative driven, so like leveraged, to get people inside and get some liquidity, and then they sell into you, they dump into you, and that's because the kimchi premium is gone. So if we are underwater, they're deeply underwater, and that's something that you should also know. Other things of notice, we can see the BTC.D, which is basically the market cap dominance. We see this important inflection points. This is like the 4th time already I've been showing this chart. I've been using this chart since forever. I marked this golden box because it marked the place where it bounced last time, and where the market started like finishing up. We had this push over here simply because this was 27 days after the BTC top, and that's something that I will touch on just in a second, so don't you worry, I'll cover it. And I got my reasons for that, right? So then we have I started marking this box, just an order block. We see how there's a huge demand over here, so I just translated that over here. Ever since we touched that spot, we've been having less and less volume, which would imply that people are cashing out instead of like going into BTC. How to read this? When dominance is falling, we basically have what we call alt seasons, right? Again, just to show you something that we had like since last year, right? This really steep fall over here that we see here, this is summer of DeFi 2020, right? Then we have a huge rise until late November. Then December, people are bored, people cash out stuff to close the year, and then we start seeing some huge movement in BTC beginning when the year begins. We start to see that basically until early January. More and more people are coming into the market, into this yearly opening, and alts start like really going strong, and you can see that because the alt season was here. This is where most of the legit alts, we're having an alt season over here. Then we started having place of compression in the market where nothing was happening. Everybody was growing, like increasingly mad at what was happening. Like, we're not going up. Some people were beginning to say like we topped, and in my mind I said like, no, we still have much more to go. What I didn't know is that we had topped most of the blue chip like alts. What was left, it was just excuse me for being a little bit not appropriate, but it's just BS. This is mostly like Shiba Inu, and Dogecoin, and Dogcoin. I don't know how you people call it. Back in my day, we call it Doggy. And back in my day, like good old back in the day, it was Bitcoin Dark. But yeah, not really. So other than that, we've been bouncing, and we've been having kind of a bullish structure over here. This is double top, which I don't like. It would imply that alts are gonna have some kind of small breathing space, and what we're seeing in ETH and other major alts seems to imply something like that, which I guess is positive for all the alts, but still we're oversold in our oscillators, so it's likely that we're just gonna recover. We're just gonna regain our 50 EMA support, and just like go up and then bounce over here, and you'll see how this crab market, this choppy market, is gonna keep going. Other than that, I can show you this. This is basically my super mega pitchfork chart. This is what we're having right now, right? Right now, this is where we are. This is a chart that I've been pulling out since 2018. That's when I first started using it, and I just selected like my main pivot, on the pitchfork to be the top of the 2013 top, not 2014, but 2013 top, and just looking at where everything was going, and then just top to bottom, right, and just move it like that. Why do I use logarithmic scale? Again, we've been growing, and adoption curves in technology, they move exponentially because more and more people are in the market. So far it's worked like wonders. It's crazy how good it's worked, right? So like, even if we go over here, I was over here back at the top, I was looking at how we were breaking it, and I was super confused because it was working perfectly, and back then I began exiting more or less like over here, not gonna lie, like more or less like over here. I was expecting some kind of bounce, but I didn't exit completely on my exposure. I exited most of my alt exposure when we failed to bounce over here, 42, 43. I had a line over here, this spot over here. You see this line? When we failed to bounce from this spot, like, I just sold everything, and I knocked out all the exposure I had to alts, because that was an important spot for me. If we had lost that support, it was gone. So far it bounced twice on my super pitchfork, and this is where we are. Weekly candles. On weekly candles, we are exactly on the 50 EMA support. You could argue, and most people use 20 or 21 weekly EMA support. to know when the bear market starts. Why? Because it's worked always. Like back in 2017, 2018, look at where it was. What happened after we broke that? Gone. And whenever we broke it down in a wick, we always bounce from it. That's why people are used to using like the 21 weekly EMA as a sign. So whenever we closed, even right here, like even back in 2013 when we closed, when we touched it below, we bounced really hard. Basically creating an engulfing candle over there, but an inverse engulfing candle over there. And yeah, we happened to touch the same line again, and boom, we bounce again. But when we close the body of a candle, when we close the body of a candle below the 21 EMA, it's hard to say. Like, yeah, it worked back in 2013 in a much less liquid market that could move more easily, and we had the double bubble shenanigans. But afterwards, every time we closed below, like over here, well, it was the sign of a bear market. It's that easy. And yeah, that's why people use that. But even then, I still like kind of use the 50-200, the traditional market, and everything seems to be pointing at the same kind of thing. Like this is the support we have over here. People think that we cannot go below the our previous top, which was 20,000. What I think is that a lot of people, like if we go this far, I've got reasons to believe that we're gonna have a bounce before that. Like if, and that's a big if we break a 30k support with the body, not a wick, with the body of a candle, if it breaks down and just it breaks down below 30k, it's an easy short. That's just major support. I would think that the next stop to think about would be the CME gaps, and we have a huge one right here at 24.5k, up until 26k. So I would be like, I do have some spot bids over here, and I do have some stinky bids over here as well, and I do have some really stinky bids over here. But I highly doubt we're getting like this bad. We also have a CME gap above, which if we get like this kind of megaphone structure that we've been building, like if we get above this, I would like it. If not, I don't know, not too sure. Something to take into account. But here's the thing, like people, if we get to the 20k, most people are gonna be expecting to have like, yeah, that was a previous all-time high, there's no way we will go below. So what will people do? They're gonna go degenerate long at this spot, right? They're gonna go degenerate long at this spot, and market makers are just gonna try to liquidate them. So they would simply go a little bit below to a place where it would liquidate most people, and I would believe the liquidations would maybe could go as far as, yeah, the 16k, 17k, and the 200 EMA on the weekly seems to imply something similar. And so far the 200 EMA has been a good sign. like a good like over here it signaled where we would start like Uber, like the Uber bull cycle of the 2015 up to 2017 cycle. And it kinda did over here with a retest, heavy retest below. But once we started closing like above, like you see how it was retested over here one, twice, and then we started the bull season, right? So it's something to take into account. That's just like super macro, and that's just and don't get me wrong, that's just if we go super low, like if this was the top for this cycle or whatever, like hopefully not, but if it's not, like if it was the top, that's what I think that could happen if we're talking like super macro scale. After that, I can go into, this is my usual chart. This is a chart that I use the most. I know it's a little bit messy. It's a little bit messy because I just keep adding, and I forgot to like delete this these things before I started the stream. So I hope you don't mind. I hope you don't mind me having this. Okay. So we have basically what I call the range. This is our big range. Yeah, I had this area of interest because it was like monthly opening. It was monthly opening, and guess what? Monthly opening, and monthly opening over here. This was a pretty huge support resistance over here. Why can I call it? Because this was the place where we found balance back when everything bounced, right? So this candle couldn't close below this, candle couldn't close below this, and it worked as support here, at resistance here, kind of support here, resistance here, kind of support here, resistance here. So like these were lines that I was heavily looking into. Same here, same with this. Like this is just respected support and resistances, so this is a place of interest. It also falls under, like, if I go and do this, this right now, boom, boom, you'll see it matches like one of the bigger areas where most action happens. So I'm gonna delete that. That's what I did. That's what I understood from it, and yeah, that's what we're been having. So weekly opening, I failed to do a proper short here, and I gotta be honest, like I'm not perfect. I set this to be like way too tight. Like I should have done something. I should have done something like this. Like I should have done something basically like this. This is the kind of trade that I should have done. So I would have a risk-reward ratio of 4.66, which is not bad at all. I could have leveraged that like to hell and get a massive profit. And that's just like being super safe. Like if this bounces over this line right here, this is highly likely to fall to like Goblin Town this time, because we're deeply overbought. So we're bound to see like more downside than any upside. But if we get a bounce, I would expect like a bounce to over this place, which was a respected support resistance again. And this is a place where I'm gonna put more shorts if we get there. Why? Okay, we're getting lower lows. We're getting lower lows, and I'm very certain that we're not gonna do a higher high. So yeah, that's what I would do. I would have done like maybe small leverage on this trade over here. Let me move this just so you guys understand how I work. And then I would have done something like I would have added to my position over here. Something like this over here. And the risk reward, I would have put this slightly above the like the close. Like I could have gone like over here maybe, because it's previously heavily respected support resistance. But let's go super safe. Let's just say I would have gone like this, right, above this wick. I would have had a 2.96, or basically 3, a 3 risk reward ratio, which would have been nice, which I would have added to my position, so I would have like exponentially increased my profits, my P&L. That's if like, and this gives you exactly what you need to know if you put $1,000 in. So like just account size $1,000, and that's without leverage. So I would have gotten like a 3 or something, and then more over here. So yeah, it can still be like done, but I messed this one up and I got squeezed, and right now I got to wait. Like I cannot, I'm not gonna long this, even if we get a bounce over here or here, which we actually did. Do you see how this wick, this close opening wick space is respected? We've been bouncing from it. Yeah. But yeah, that's just other things to notice. Oh, there's something I need to mark, and I haven't marked yet. So I'm actually gonna hide this because I might use this trade idea afterwards. Horizontal ray. We got a new monthly opening. Did we not? I think so, right? July, yeah. We got a new monthly opening. So we do this, and we want it to be, what color do you guys like? Let's put something that makes us feel better. Something yellow greenish. Something like, I don't know, like maybe this, and let's call it July opening. Text alignment to the right, and I swear I'm gonna. So this is what I actually do. Like as a trader, I'm like a sniper. I think it was Trader Main, the guy that gets called out for having like a big neck all the time. That he said it this way, and I liked his metaphor. Like we're like snipers. We take this on the big scope on a monthly candles, and you can also see this. And I don't see how people can be like super bullish on it, but whatever. At least we're getting to like oversold like we're getting to oversold area. But do you know what happened when we went oversold last time on monthly candles? Yeah, choppiness with lower highs and lower lows, and pain, and super pain. And people were like long in 6K, like, yeah, it's free money, it's super free money, everybody was doing, until it wasn't. And then we got a cascading liquidation back in back then. But yeah, that's a topic for another moment, right? So I don't know, man. I don't know how people can be bullish on this like super macro, but I'm still gonna hope some hopium here. And this is the daily. We got the July opening now over here. This is a place that we will have as an important place to mark. What else? Yeah, this is the one I used to trade, because I'm mostly trading on FTX as far as futures. So everything that's like a short or a long, I do it over here. I just wanted to show like the typical Wyckoff distribution and all the different spots, like textbook. This is just textbook definition of everything. And this is the range that I've been personally using. I was using one where we had like this before. Wait, we had this before, and our mid-range would have been this. But I started like doing it a little bit more closed, because we started having more data points. Like I had this support, this support, this support, this support. So I said to myself, and then the mid-range, and started like, it makes a lot of sense, you know? Here, 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 here. So this is the range that I've been trading. This is not a fib, like a fib range. As you can see, I just got like 1, 5, like mid-range, full range, no range, and 0.75, and like mid ranges and 0.25, right? And it usually works. I just let me remind you guys, for people who might be watching this and they're not like the super traders, you should know that the safest trades are always made like from, let me take this out, from bottom of the range to mid-range, right? And yeah, and or edge to edge trades. The easiest trade on a range is the first one. When we fall this far, like the easiest trade you can do is like the basically the bottom to top, and you can do it at least once. So the second easiest trade ever was basically this one. This was the bottom of the range. We had a lot of strength, we were oversold, and we went to the top of the range. That was the second easiest trade. Then you could do it again, top of the range, boom, and back to the bottom of the range. Then we could see this going to 0.75, back to the mid-range. The mid-range is a magnet, right? The mid-range is a magnet, so just take that into account. This is the range that I've been using. I mark every week's opening, and the Monday high, just because I was training last night. But again, I was not perfect, and I've been using perhaps too much leverage. So my risk, according to my reward, I've been setting too much leverage for short, like really small trades. So I get squeezed out and I just get stinged by and stand by the sidelines, you know. But that's just on me. Like I keep a journal of my trades. That way, like I know what mistakes I'm doing. So it's better to start with less leverage, so you get to catch like the trade with a higher or lower stop loss, and then afterwards, then you can scale. You can scale in with a higher leverage when the trade gives you conviction of like confirmation bias or directional bias. Again, that's just what I've been doing regarding BTC. Other things to take into account. This is Bitcoin historical volatility index on BitMEX. What I want to see over here is just how we've been ranging. There's less volatility. And when we're like ranging on smaller and smaller periods, or waves, it means that like we're basically ranging, right? Because there's less volatility. But then again, it's very likely that we see less volatility to the downside to the downside as we go lower. There's also something to be said about these, which mark like tops. They usually mark the tops. Like you see the inverse Bitcoin volatility token against USD, which it marks tops pretty well. Like and that was quite a top. I cannot say for sure if it marks bottoms, but this is kind of nice, I guess, when we see something like this. Because every time we hit like these levels of oversold, we get big bounces, but we also get these ranges. So it's hard to say. Then what about ETH? ETH, right? This is one of possibly the best charts I've ever done, because it followed it perfectly. I started doing it like when the year started. This is just ETH against BTC on Bitfinex. I mark every order block or places where there's a lot of supply and demand, like stuck here. A lot of demand over in the spots. This is a Livermore cylinder. This is a bullish accumulation structure in which like you keep accumulating, but as a whole, the whole market keeps growing, so you still go up, you know. I started creating my positions in ETH around these level, and then on this level, because I was like completely sure like this was like, okay, confirmation bias is there, directional bias is there, so I scaled in with even more, right? People are like jumping and they're like super happy alts are growing, and yeah, ETH is gonna do the flippening. I don't believe that, but if you want to believe that, I'm not against you. Like, it's okay. As long as most of the liquidity of most alts is in BTC, you won't get any flippening. And the more people take to understand that, the more it will happen, because there's more and more people and they believe the same thing. Okay, so we did a retest. This was perfect. Like, this was perfect. As soon as it got here, created a doji, bounced from this spot. This area was not perfect, but I could see on this like different supports, it's being rejected by it, and we're highly overbought. So I think we're gonna go for a retest of the 0.05556, like these levels. Yeah, 0.055. Here's the thing, this does not necessarily translate into ETH USD. You know why? Because BTC is moving in price. This is what happens when BTC and alts grow together. See what I mean? So yeah, people are pouring BTC into ETH in order to exit positions to make people FOMO, right? But guess what? We came right into the mid range, and people were like, "Yeah, the flipping, yeah." ETH is gonna be like, ooh, the best, and above everything else, it's gonna be the flipping. Yeah, sure. Maybe yes. Maybe I'm deeply wrong, and you can long it. You can long it, and my liquidations will be your liquidity. So nice for you. No need to be like super insulting against people who show directional bias that does not match yours. Okay, what do we see here? We see an M, traditional M, boom, double top, but still like pretty bullish, right? Like we didn't see much of a range. What did we see here? Then we fell below that major support, this major support. We went to Goblin Town. We did the W, boom, below, but we did retest the lows, which is not that bullish. But hey, and on reducing volume, you know what this means, right? That's like, that usually just means like derivative or BTC related growth. When we have less volume but higher and expanding candles, that's what it means. You just gotta see it. It takes time. But yeah, so this is deeply overbought right now. We might, like, I might get to eat my words. I might go above it, then retest it and go more, and stay over here at overbought levels for a long time, like we've done in different spots before. I somehow doubt it, because when that happened, we usually saw like more strength into BTC, and that's why you saw like the BTC like lowering volume but still like expanding candles into higher price, right? This is my range. This is what I've been using to trade ETH. And all alts give a higher beta than to BTC, simply because like they're less liquid. So when they jump higher or really lower. You know what I mean? And yeah, that's as far as BTC and ETH go. There was something else I wanted to show you here around this. You see this, right? Look at this. Boom. And then we get to see this. You guys are not going to like this. I know that. I know that, but bear with me. Bear with me. Date range. There we go. You see this? 27 days from top to top. Right? You see this? 27 days. Wait. 27 days from top. Okay. From top to top. Not a nice fractal, right? Horrible fractal. I know. I also hate it. It's also painful for me. Like, don't get me wrong. But then we have interesting things to see. Like, for instance, look at this. ETH is following the crypto total market cap structure to a T, like freaking perfectly. If you want a lead indicator on what's happening, on where the narratives are, this is just so you see like the power of everything. Then we're gonna have BTC USD. I wanted to show you something. Finex BTC USD longs, new all-time high. Finex BTC USD longs, all-time high broken. That was the last time that we broke it. You know what happened afterwards? Yes. Super hyper mega goblin town. The March Black Swan. That's what happened back then. You see how we're creating lower lows, and kind of lower highs, with the exception of this, which is creating kind of like a megaphone. As more and more longs are piling up. Do you see that? I don't like it. I don't like it, and I'm gonna show you something. I know I have this somewhere. BTC USD shorts, and we create a new price scale. Boom. Interesting, right? This is super interesting when you see things like this, when both are peaking at the same time. There's something happening. The Bitfinex whale, it's got something really nasty going on. But hey, who am I? Who am I to say anything about it? Just wanted to show you this. Those are some things to take into account. Other than that, I wanted to talk a little bit about the legacy markets, right? Well, okay, I can talk about other alts that I personally like. You can see, the index. These are the indices. This is a range that I've been using for like alt perp. The alt perp is an index that carries like a weighted average of a lot of alts in it, like a whole basket of it. And yeah, this is what I've been trading as well. It gives me like good upside. Like it gave me good downside over here with really small leverage, because I actually started over here. This is where I started my, like, over here. This is where I started my short, and I did have like big stop loss, like risk management over here, so not much leverage, and it gave me good results. Like, yeah, we came here, retest, we came back to the mid-range, retest, and then Goblin Town, retest, and Goblin Town again. I closed it around like here, around here. When I saw that we were like doing a retest of the mid-range, I just went like weak, because I just saw that we were like hugely oversold, and said to myself like, nah man, that's gonna create like this range over here, you know. I want you to see this structure, learn it, because we're gonna do like some classes here. That's as far as alt perp. We can do interesting indicators by doing this. How are they performing against BTC USD? Right? This is something to mark. And this is usually a better indicator, just like about cycles, and it's pretty good. March 2021, what happened? alts begin falling, right? Then mid-March, boom, scam coins going up. Do you see this structure? Do you see the structure? Do you recognize it? It's okay. It's okay. Then if you don't recognize this, you're gonna recognize it forever. I swear. Then let's look at Shitburp. Remember back in like a month ago where I was doing videos where I showed you this. Come on. This. I told you guys like, hey, this is deviation of the range. We're likely gonna get a new deviation of the range. This is the range that I'm looking at, and we might get this. Like if we look at this, I didn't expect it to like to hit it to a T. Well, look at this. Like boom, 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 retest, boom, heavy going down, then retest, and if we're gonna continue bullish continuation, which is unlikely, but if we're gonna have it, we would need to range around this price, and go up. But we haven't done that. But I didn't expect this like to fall so nicely, honestly. But look at the structure. Look at it again. You guys are not going to like this, but and before anybody says anything, I'm not a perma-bear. Like, I live from crypto. I don't want like everything to be bearish. But like, I mean, I do risk reward. Wall Street cheat sheet. I'm scared that we might have like a Wall Street cheat sheet like this, but this euphoria being like Wyckoff. But in any case, see this? Can you see this structure? I'm gonna read all the emotions, and you're gonna tell me if you felt this. This rally will fail like all the others. A recovery is possible. This rally is real. Time to get fully invested. I will buy more in margin. Gotta tell everybody to buy. I'm a genius. We're all gonna be rich. We're all gonna make it. We're all gonna make it. Yeah. And we fall down. Get to complacency. We just needed to cool off for the next rally. Anxiety. Why am I getting margin calls? This dip is taking longer than expected. Why haven't we jumped? Denial. My investments are with great companies. They will come back. Panic. Shit. Everybody's selling. I need to get out. Capitulation. I'm getting 100% out of the markets. I can't afford to lose more. Anger. Who shorted the market? Why did the government allow this to happen? Depression. My retirement money is lost. How can we pay for all this new stuff? I'm an idiot. Disbelief. This is a sucker's rally. And then we go to disbelief again. Just take into account this part of the cycle can take years to form. Just also remember this. The peak of the point of maximum financial risk and contraction, expansion, and the point of maximum financial opportunity. So when we get to that spot, that's where you should start like scaling in if you want to become a millionaire. I would recommend like just dollar cost averaging into like good stuff that keeps developing and keeps doing stuff. But look at the structure. Then look at this structure. Where are we? You guys tell me. Where are we? Are we in denial? Are we in anxiety? For me, this was anxiety. This is denial. I feel we're in denial, and soon, if we break like under 30k Bitcoin, we're very likely to get a capitulation candle that will scare the hell out of everybody. Like boom, super low. And look at this volume. Look at this volume. Things to take into account. So yeah, what other alts do I like? I like RUNE. Just remember that RUNE has insane beta with BTC. So whenever BTC does something, like if BTC is bouncing strong, go long on RUNE, because RUNE will bounce twice as strong. Same thing with the shorts though. Like if BTC is dumping, RUNE is gonna dump twice as strong. Yes, I do like RUNE. I do like LUNA. In regards to LUNA, yeah, there's a particular group. Shout outs to RUNE Lala. I love the people in that group. I really love the people in that group. Like Joker, there's the DTX, and there's the Thor lady, there's Jade. There's a lot of people that I like sharing ideas over in that group. So if the name didn't spoil it for you, it's basically a group around RUNE and LUNA, and I was showing everybody like this analysis. I'm not gonna get bullish until we break this. And guess what? We couldn't, and we're at overbought in BTC. And everything that's happening here is BTC related. See how there's less and less and less buy volume? Like, this is a lead indicator candle or volume histogram, volume bar, and less and less buying, but more and more expansion. That only tells you that it's BTC driven and it's derivative driven, so people going long. This is the place I've got marked down like for months now that we need to break. Why? Because we retested it here, there's like liquidity stuck here, and look at it. It couldn't break above here, couldn't close above here. So when we finally do it, what's the first reaction? Boom, we're going down. And not only are we going down, but we're going down at like deeply overbought levels. I hope this gets into like a really weird extension, like this one over here, and we just like keep going. But volume doesn't seem to imply that's gonna happen. So something to take into account. That was a huge resistance. This was a gift for anybody, honestly. This is as far as LUNA. The Matic bounty programs, the one that were rewarding you to use Matic both on Curve, Sushi, and Aave, and all the blue chip DeFi suit. It ended. And obviously, as soon as it ended, what do you think it's gonna happen? Like, there's less interest from the market in using it because you're not getting paid to use it like you were getting paid before. That was the reason like we got this ridiculously big like recovery. But guess what? That was just a complacency leg on a not so liquid asset. And what has happened since then? Boom, lowering volume. Not the kind of thing that you wanna see. This is also a deviation if you want to look at it in another way, right? So divergence Sheet. This is the one I've been using this for years. Honestly, I just love it. And I don't know it by heart. Like I still make mistakes if I do it by memory. So I just look at it. Like I got the internet, so why not? If my oscillator is going up, but my price is going down. Oscillator up. Oscillator up. On the tops, right? On the tops, not on the bottoms. This is a regular bearish divergence. So if you wanted a place to set a short, it would have been here. It was quite an easy short. As a matter of fact, I'm sad I didn't take it, but well, it is what it is. I'm not perfect. Just look at this. This is just like suppression. This is just like market maker stuff. Look at that. There's no volume. Just boom, 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 boom. And no volume. I could talk about Ave. And, oh, this is a messy chart. Sorry for that, guys. Like, I'm really sorry. Like, these charts, I made them, like, when we were over here, like, back in February. So, excuse me for that mess. Same with sushi. Sushi was one of the best looking ones. And it still gives like pretty good beta with BTC. So if BTC does something, sushi is likely to do the same thing like tenfold. So just to take into account. What else? Link BTC and Link had one of those like blow off tops, and look at that, like, oof, capitulation candle. Hard, very hard. Still overbought on daily. And if I look at Lincoln, one of the alts that I was looking into to create a position, because it's regulated, and I think there's an argument to be made about regulated stuff in the upcoming days, and I will talk about it later. I know this is gonna be like a really long episode, but that's why I tried to put music on it and make it as easy to to consume as possible, because I'm just gonna throw it all in. If we broke this huge accumulation phase, we were about to see like fireworks, but guess what? We didn't. Like, yeah, we got this break over here. We got this break over here, and ever since then, nothing. And this has been like the support, the resistance to break. Here, and here. I made this resistance over here because this is where we got here, and this is where this candle stopped, right? What else? Sol. People are like looking at Sol, and honestly, Sol is like one of the most bullish things in the whole market. It didn't dump that much, and it bounced like an MF. It bounced really strongly, and that's what you get when you have like a billionaire owner who is your market maker. Hi, Sam. And yeah. So that's what happened. So I honestly made a mistake here. I capitulated way before I needed to. I just saw that we were breaking like all different supports, and I was scared. So I capitulated on. I did the noob thing, like what most noobs do. Like I became super bearish because we were breaking all supports. I didn't. And the relief rally on Sol was, I should have waited, but I didn't, and it was pretty strong. So that's on me. I make mistakes, and I'm quite transparent about it. I'm quite transparent about it, and I'd rather be transparent to everybody that's following me or watching these videos, rather than being like up only or down only or whatever only, or just trying to show you some stuff. So I'd rather just do that, you know. And whenever you see this, then you gotta look at BTC and look at this. Look at this. Look at this. It's just such a nice technical chart. It's been respecting everything. Boom. Look at where it started bouncing. It's light bounce though. Not too strong. This is not gonna last, this bounce. But hey. And all of this, I just did it out of this breaking out over here. Fib retracement, fib extension, and back in the old days, I would say that alts used to grow like 4.236, like on a full cycle from bottom to top. But hey, like a lot of alts have been going insane over here since then, and yeah, so this is what happened. Like cup and handle, you could argue this is a cup and handle. Then we had weird really weird how would you call this, head and shoulders shampoo over here with a fake out, and that fake out basically went boom crazy insane, and it's been respecting the areas. What else? How's Cope doing? I know Cope gives you a lot of airdrops for no reason at all. No volume at all. And falling to Goblin Town below $1. It must hurt. You gotta cope with that. Okay. That's as far as crypto, right? You guys have been, anybody who follows me on Twitter, they know that I try to have like a macro outlook on everything in the markets. I do believe that we're on a massive, on the brink of a very bearish blow on all markets. Crypto is the first to fall simply because it's the less liquid. And it's just liquidity musical chairs. You go from the least liquid to the most liquid in order to exit positions. If you are a whale, you cannot exit the small markets without breaking it, right? So you start breaking the markets from lower to the highest. Okay, that's what we do. And that's exactly the same reason that markets do what they do on crypto as well. You see the BS, like the BS coins, like Dogecoin, Shiba Inu. They are the last, and they're always the last to pump because they're easiest to pretty high beta, so they can go really high, and they're not as liquid. And they got like quite infinite market caps, and they're also the first ones to fall. So when that falls, the rest is gonna fall. You see how we went from the shit perp to the mid perp to the alt perp going down? Did you see that on the indices? Well, now you do. That same theory is the same thing that applies to all the different markets. So we've been going from crypto to meme stocks, and then we're going into commodities. Then we're likely to see a fall into utilities, which will likely lead to a fall into energy. But it is what it is. So let's try to analyze other macro factors, okay? As far as macro factors, let's go SPX. If you don't know what the SPX is basically the Standard & Poor's 500 index. It's the Standard & Poor's is one of the risk rating, one of the risk rating boards companies, one of the most important in the world, and the S&P 500 are basically the 500 top stocks in the capital markets of America. So it is what it is. Let's do this. I want to show you guys this TVC SPX plus W 500 Wilshire 500 completion index NYSE dot. We see this, right? This is a representation of the whole, like the 5,000 biggest companies in America. Why America? It is what it is, man. Like, hate the game, not the player. America is a leading like economy, and everybody depends on their economy to an extent. So, what are we gonna do? Oh, by the way, do you see this megaphone structure? Take it into account, because you'll remember it. Maybe if things go all right in a year, you'll remember it. Don't ask me why. Okay, now as far as the SPX goes, I could go weekly and just show where we are. We're not oversold anymore, so we can go up. And let me add a small line over here. Sorry if this stream today is gonna be a little bit like long. I'll try to like mark the different episodes, like the different segments, just so it's easier to analyze and to watch for all of you guys. I'm just gonna pour everything that I got, or at least a lot of the things that have been going through my mind. Why? Honestly, because like let's be quite honest, like I haven't been here for a while, and I want to share with everybody that follows me, 50 coordinates. I'm gonna change the song because this one has lyrics. I don't want lyrics, I want something that's chill. Okay. Why the 50%? Why 50? Because it's a good percentage. It's a good percentage. We see bounces, retests. We see them all the time, right? So we could see some like Fed tapering and upside move. Not too bullish though. I'm very scared for the legacy markets. Okay. So this is SPX and the rest of the companies, right? Warren Buffett, he has quite an interesting Warren Buffett indicator. He has quite an interesting idea in which he says. He says that companies, oh damn, I can't, I have to delete this. Boom, boom. Yes. On the daily, boom. Is this it? No, this is not it. This is not the indicator I was looking for. Sorry. Buffett indicator, Quant Nova. This is the one I was looking for. Yes. His indicator is honestly quite simple. What he says is that you should divide your capital valuation over your gross product, your GDP, which means that if you are over it, like if you're, if your capacity, if your economy, if your GDP is massively over your capital valuation, it means that then you are undervaluated. If your capital valuation is over your GDP, it means that you're massively overvalued. And what happens when things are overvalued? Things tend to find their proper value. You can say that with me all you want. Okay? Just so you take it into account. And this is a nice indicator over here. It's a quantum nomad, the Buffett indicator. We're right now massively overrated, overvalued, and other big indicators that you should see. Okay, this is something that you're gonna like. So CME, LBS. Is it? Yeah. No. There we go. Divided by gold. Yes. Okay. New pane. Okay. Some of you are gonna ask, what is this guy doing? Like, what is this guy doing? What is this that he's showing us? This is just an indicator. I am not the creator of this indicator, like this idea. I got it from, I'm forgetting the name, George something. Let me look for him. Twitter, lumber, gold, lead lag report. Michael A. Gade, or Gayet. I don't know how to say that name, but he's the guy where I've read most of this concept, and yeah, it makes a lot of sense. It's quite simple, honestly. All you need to know is that the vast majority of equity of people is in their house. The vast majority of equity is in their house. What's the biggest leading indicator on the housing market? Lumber. Simple. Lumber. And then what's the biggest indicator of uncertainty in markets? Gold. Right? So we basically create a ratio between them, and just like we take the different peaks and mark them, and whenever we mark them, we usually get, it's a leading indicator that tells us what's gonna happen. Look what happened in this peak. This is on weekly candles, by the way. What happened on this? Boom. And people were like, oh yeah, complacent. Yeah, we're going up. The Fed tapering. It's gonna go. It's amazing. It's amazing. The Fed can do everything for us. But guess what? It didn't. It didn't. And then we had another peak over here. And guess what? Boom. Another fall. And then guess what? We went up. It was nice. We were deeply undervalued, and we started creating like higher lows in the Buffett indicator, and also on the SPX as well. And this is basically an inverted head and shoulders, which gives us a place around here. Deviation, fake out, and a boom, ranging over here. But look at this. What do we have here? Another peak, boom, another fall. And then look at this. We have another peak over here, another fall. See how the structure in this indicator, it's pretty leading to the kind of structure that we will have. We also have, like, if you, this indicator works better on dailies, but I just didn't want to, like, I didn't want to push it that far, but you can push it on dailies, and it's much better. Like, you see it here. What happened here? Boom. Started falling, retest, and super fall. Same here. Same here. Fall. Here. Fall. Right? But I like, I wanted to show you guys the weekly so I don't spend like 2 hours more on here. It's already 1 hour and 40 minutes, almost 1 hour and a half. And yeah, we've been having peaks right around, like, hugely overvalued. Like, look at what happened when we were creating those peaks around, like, overvalued, settings. It tells you a story, you know. Like, yeah, this is just the Fed tapering with the market, saving the banks and screwing you in the process. Usually. Then this is what we have. Yeah, COVID and whatnot. COVID on this peak. This peak was so nice. There's a peak over here, and look at what happened. Like, if you follow the same setup that I'm teaching you right now over here, if you short it on this week, you would have, like, gotten a lot of money. Besides, this is not a bullish structure. Same kind of, how can I say it? Same kind of boom. All right. You'll recognize that kind of rising structure if you were paying attention to BTC. But hey, this is what happened. This is what happened, and right now we're in a spot that I don't like at all. Like, we're the Fed is just, like, tapering everything and saying inflation is stationary, and we can see that in other things, you know. Okay, we can get rid of this. We can use my stock RSI. Don't blame me. I love stock RSI. I have pretty good results backtesting everything. We seem to be finding sort of support or confluence around here, which would lead to a bumpiness in the market. July is usually a time of, like, yes, July is usually a time where volatility goes down, and August is a time where it usually goes, like, really high. But hey, this is on a weekly, that's what is happening. July, the first 2 weeks of July are historically, look, you can check it. First 2 weeks of July are historically quite interesting. Backtest it. First 2 weeks. Like this area over here. Huh. Interesting. This is the VIXI. This is just like a volatility index. So what's happening right now? The economy in America is not that good, but the capital markets are super good. They are so good that it's scary because they're based on thin air. Why? Because of what I showed you on the Buffett indicator. The GDP or productive capacities of the economy, the actual economy, are not up to date with the pricing of the pricing of the other capital markets. And what does that mean? What does that entail for us? So then we can check DXY, Dollar Currency Index, created in 1971 after the big crisis, the big crisis, where it basically selects um, all the different baskets or markets that trade with dollar, right? And it's basically an indication of where we can go and how the dollar is doing, right? So we see this, we see how it fell to the floor. 2008 retest of the golden pocket, back down, retest of the golden pocket, back down, and then we started recovering since July 2011. And back since 2014, we've been going like crazy. Why? You tell me. I'm gonna give you that homework. Look at what America was doing back in 2014. That everything started to go like up only. I'm not gonna spoil it for you, but you'll see. You'll learn to relate all the markets and read everything. I'm still keeping this range. We bounced from the. I showed you this last time. We bounced from this spot, which is not good for BTC. Usually, it's not good. It is good when it's falling, and you can use that, like you can see that comparison like on a different pane, just like I did before. So the dollar is increasing in value, but it doesn't make sense, right? Because the economy is not growing. US oil has been going up ever since COVID. You know what holds the dollar as a reference currency, right? It's the petrodollar. That's why they go on war with a lot of like oil producing countries. Sorry. So that's what happens. So right now we see how it's up only for oil, and we're getting to some places where we should start looking into it like really hard, really hard. This is also good if you're got like synthetic stocks like mirror market or any other kind of thing like that. Should take into account this. Oil is going up, and everybody's happy, and the dollar is going up, and the capital markets are going up. What happens when oil is expensive? Everything becomes expensive. You know why? Because all the supply chains depend on oil. That's how we move everything, right? That's how we move everything. So if oil is going up only, that would imply that the costs of transport for everything are going up as well. And that cost, it falls on your consumer price. And that's what leads to inflation. But don't worry. It's only temporary. Nothing to see. Yes. So then we see metals, gold and silver. I like silver more so than gold, because to me this is a bullish this is bullish. And I got another reason to be bullish on metals, which I talked about last time, and it has to do with Basel, right? I like, bear with me, guys. This is gonna be a long video, but I need to release it all, because if not, I'll never do it. Like, we're getting to oversold levels. This looks to me like bull flag, like heavily suppressed bull flag. And it's heavily suppressed because like fiat silver is there, just representation of it. But with Basel number 3, Basel 3, you cannot do that anymore. Okay, so let's talk about Basel. Let's talk about environmentally friendly economics, and how everything is being affected by that, and no one is talking about it. It's like only me, and as far as crypto Twitter, nobody is talking about this, but it's got everything to do with it. So we got this in the silver, right? Now let's go a little bit fundamental, right? Oh, okay. Bitcoin stock to flow bottle. I wanted to talk about other things, just like if we're gonna keep using this model, then let me tell you, stock to flow. I've never subscribed to this idea, because as we go exponential, we go and have a lot of different actors in the market with different interests and more complex structures. But more so than that, if this is gonna hold, then we seriously need to bounce like around here, like yesterday. But whatever. Basel. What's Basel? Basel 3. Pam pam pam. Let's teach you guys a little bit about Basel. After the 2008 crisis, let's say the whole world started creating this treaties. Thus, they got together and agreed upon certain things to do in order to help save us from future financial crisis, right? And what are the financial crisis or the requirements, the main pillars of the Basel structure? Pillar number 1, minimum capital requirements. What does this affect? Liquidity coverage ratio, which means that you need to have enough liquidity in your bank for your fractional reserves. Same thing goes for net stable funding ratio, which affects all money markets, and this includes crypto exchanges. Over-the-counter derivatives charge, which basically means you cannot give leverage for free, or you cannot give like leverage to everybody. Quality and level of capital. This is where a lot of regulations come into play around leverage, not only on crypto, but mostly on crypto, because crypto has like free and easy leverage, and that shouldn't be that way. Leverage ratio. This is why you see that people can only leverage up to ×4 and ×5 now on China and Asia, basically, and regulated countries like America and so on. This is why. Capital conservation buffers, which means what you're keeping as reserves. Countercyclical buffers, more reserves. Enhanced loss absorption costs, or write-off or debt conversion. So how much of your debt or your liabilities can be converted into capital, like right in that moment. This is why you see in Deutsche Bank and a lot of European banks that they assure you a certain amount of your money, right? because it's by law. Pillar number 2, supervisory review process. So supervision. This is just like what they're doing, managing risk concentrations, and this is a place where we will start to talk about governments, where we will start to talk about environmentally friendly economics. Yes, and other more intrinsic risks in the markets, like supervisory colleges, sound compensation practices, so it's not like one guy taking all the money, and fair pay, so so you pay fair and you expect people to be less corrupt, but that's BS and you know it. But okay, and pillar number 3, market discipline. This is huge. Additional enhanced disclosure. Read this again. Additional and or enhanced disclosure. Okay? This is why Tether needed to do everything before May. Risk management, market, credit, operational. And what does this entail? Regulatory capital components, detailed reconciliation of capital, regulatory capital ratios, and securitizations exposures. Or basically, what makes up your liabilities and your reserves and your capital, which you derive your fractional reserve from. Okay? One of the details of the implementation of Basel number 3 is that liquidity and the NSFR ratio for gold and silver means that the ratios, you cannot be selling gold like paper gold. All your gold must be backed. So the actual bullion, gold bullion, has insane value right now. So what happens? It creates a massive demand from banks all over the world buying gold and hoarding gold because they do not have enough reserves. See what I mean? They do not have enough collateral of gold in order to stand the regulations. So this creates a supply crunch, which obviously creates a huge movement as well, right? Which is what we saw over here, which is what we've been seeing, right? This is just like technical bounce, but it falls under the same umbrella. You know why? Simple. Banks must sell as well, but they're hoarding. China, I showed you the articles on my last video last time. Like, China's hoarding, Asia itself is hoarding, Europe is hoarding gold, America is hoarding gold. Why? Because they need gold for their fractional reserves. So just be careful. And that's why I'm so bullish on gold and silver, because they cannot do this anymore. They cannot suppress the prices anymore with paper silver, which they sell at resistance to unknowing buyers. They cannot do that anymore. Same thing with gold, even more so with gold, but with the gold bullion. That's why I usually check this. That's why we usually get this, the gold bullion. Okay? By the way, I added to my position over here on gold. So on Mirror Protocol, I bought I bought some more gold exposure, just to start a test, and more so, and other things. I do want to buy like real gold bullion and stuff, but it's regulations in my country are pretty hard to nail down. So there's not much I can do about it other than get price exposure through crypto protocols. So thank God for their existence. Yeah, that's as far as gold and silver. But here's the thing. You want to know when is Basel implementation? June 28th. Why? Because that's the date for Bullion implementation. Basel 3 implementation for Europe. So Europe, starting this Monday, Europe has been going on it. That's why we've been seeing all the different money markets and different exchanges and all the different things. They stopped printing money like crazy. That's why everything is looking like it's looking, because people cannot print money out of thin air, and that's why we see supply crunch. Okay. I'm honestly super I really recommend for you guys to use Seeking Alpha services. Seeking Alpha services are very, very, very good. And what I did, I do have mirror protocol positions. So what I do is that here's my mirror portfolio. I basically added every different stock that's there, added over here, and I receive news on my email. And I follow some good people on Seeking Alpha. If you're seeking alpha, join Seeking Alpha, bro. It's really good. Yeah, you'll get a lot of gold bugs, a lot of TradeFi people, traditional finance people. Yeah. It's not the best for crypto waves. It's definitely not the best, but it's good to read what the TradFi people are reading, just to know how far ahead you are. So that's good. Something that I recommend. This is more on Basel 3 monitoring to be mandatory in Europe, right? This is for the rest. I know Basel takes place in Great Britain in December and the rest of the world in next year, if I'm not mistaken, right? So I just wanted to show you guys how it can affect crypto and the Basel Committee proposals. This happened not too long ago, 2 weeks ago, a week ago, 3 weeks ago, 2 weeks ago, something like that. 3 weeks ago. They differentiate between crypto assets based on the market, liquidity, credit, and operational risks they present for banks. And guess what? Tether was mentioned as an operational and liquidity risk for credit markets. That's why we haven't been printing a lot of things. And I told you guys this would happen. I told you Basel was gonna affect everything, and it's been affecting, and it's bound to affect even more. So what other things? This is a reply from one of the guys. Somebody said group 1 is bonds issued on Ethereum and stablecoins, which are infinite, and group 2 is Bitcoin, which is finite. Choose wisely. Then you see all the different all the different people just going oh yeah, memeing around everything. Group 1 would be like Aave, Compound, which are getting institutional implementations in the past month. That's something to be bullish about. But you know, value is not equal to price. And that's a lesson that most people learn the hard way. But this is just more news. Talk about regulations on European banks and how Basel is gonna affect everything. This is what I wanted to show you guys. I'm gonna leave links to everything that I'm showing you guys here because I believe it's important to have like source of good info. This is a study published in January 2014. Stability and sustainability in banking reform. Are environmental risks missing in Basel 3? Remember, Basel 3, like Basel was planned and like was done in a committee like back in 2009 or 2010, right? This has been something in everyone's eyes for years. This is a study that talks about the different environmental risks that need to be taken into account into the I showed you guys this on market discipline and the supervisory review process. So I could like read all of this. I'm just gonna read the table of contents and a small abstract. Like this report aims to trigger deeper reflection amongst financial policymakers and regulators concerning the relevance of systemic environmental risks to banking sector stability. Recent history demonstrates linkages between risks arising both from the environmental itself, for example, extreme weather events, and from humanity's management of environmental resources, such as soil quality. Yes, and banking instability. Why? They go on the document to talk about like agriculture and lumber, and which basically are huge as far as what holds economy. You know, it's commodities and the housing market, which are the two of the biggest pillars of anything, right? And when crisis arises, that sounded funny. Sorry for that. When crisis gets here, usually banks end up like having a really bad time because they need to cover for a lot of loans, for all the loans that agriculture has. They need to cover not only the loans and the losses, but they also need to implement more and more and more money and to guarantee new technology that does not create the same problem again, right? So that's more or less where they go with this document. Evidence suggests this trend will become more pronounced and complex as humanity breaches more planetary boundaries. This document is sounding very 2021, right? And very Elon Musky. However, internal banking regulation, Basel Capital Accord, or Basel III, does not address the financial stability risks associated with the systemic environmental risks. Nevertheless, a group of countries such as Brazil, China, and Peru, along with their banking industry, have adopted regulatory and governance practices to address systemic environmental risks. This Basel Committee should learn more from their experience and consider reforms to the Basel III Pillar 2 of Supervisory Review Framework and the Pillar 3 Market Discipline Framework that would involve recognizing systemic environmental risks as material risks that potentially threaten banking stability. Just what I said before. I'm sorry for my English while I'm reading, guys, because I make a huge effort, but English is not my native language. So I make a huge effort to have like the best pronunciation I can have. So what is this again? This is table of contents, right? Forward, introduction, systemic environmental risks and banking stability linked. Basel 3 adequately address systemic environmental risks. What other financial policy options are available? Monetary policies, financial innovation, joining up banking regulation with environmental policies. This, this, like this number 4 is super interesting for us in crypto. The more you read this document, you will understand why China, for the first time, the FUD is real and they sold all their old miners. Why Elon Musk has been going on with environmentally friendly and non-friendly Bitcoin mining. Why Elon Musk and Michael Saylor are doing the environmental and green friendly mining in America. You'll begin to understand a lot of the things that are happening right now in crypto and that are affecting the whole market. The whole market. The farther you read this document, the more you understand what's really happening and why most people are not gonna make it because they don't want to learn and they don't want to be curious about this. So, does Basel 3 adequately address systemic environmental risks? Do Basel 3 Pillar 1 minimum capital requirements discourage the financing of environmentally sustainable economic activities? Important. The more you read, the more you understand what's been happening this year. Why this year? What everybody's gonna ask, why this year? Why 2021? Because Basel started taking into account beginning this Monday. This Monday. That's what's happening. First, it's Europe. You'll begin to see what happens with the Deutsche Bank. So Germany is gonna have a very interesting few months. Because why? Because all of Europe basically rely on the taxes that the Germans pay. It's funny, but it's true. It's funny, but it's true. The Deutsche Bank covers all their fiscal responsibilities. So you'll begin to see a lot of funky stuff happening. And Basel 3 hits the rest of the world later this year and beginning the next year. So if you want some hopium, the rest of the market can live and adapt until that moment. But Basel 3 is affecting absolutely everything. And not only this, but keep reading on everything that's happening. Appendices. Planetary boundaries explained. Like it's just crazy. It's just crazy. You see that you begin to see that Elon Musk, yeah, he's crazy. Yeah, I don't like the guy. But it's very clear to see what he's doing. And it's funny to see a lot of poor people, and sorry to say it that way, but a lot of poor people who they don't even have as much money as, I don't know, like Elon Musk's personal trainer talk BS about him without understanding the underlying things that are happening. This is what's happening. You want to read about it? You can read about it. I'll link everything. These are the things that are going to happen, and the different banks, and the order in which they will happen, and how they've been happening. Right? Green credit policy, green credit guideline. And then we see what happens to America, India, look at this, Japan. Then we see Europe. Europe, my friends, Europe. UK, Latin America, Brazil leading. North America. And these are the things that are that have been changing. But now we have Basel 3, which includes different stuff. So yeah, it's just that's what's been happening in the markets. That's what's my view of everything that's been happening. My view on everything that might happen. And this has been market analysis and chill with the Crypto Dolphin. I hope you've had the patience to watch all of this. Ooh, look at this. Just look at this. This is gonna go to hell, man. This is just gonna go to hell, right? Not nice. Let's 3 days to close. Ouch. We might get that capitulation candle before the expected. Ouch. But hey, that's what's happening. That's what's been happening. I hope you found some value in this. I've got more videos coming. Just you guys leave it in the comments, anything that you want me to cover. I'm planning on starting like trading and technical analysis and trading info to teach to you guys some risk assessment, some other indicators, how to read markets, how to read the news, read sentiment. I've also got some very specific Terra related market stuff, mostly mirror V2 delta neutral strategies. People seem to like that one. I'm gonna do another one. I was talking with Pete from Terabytes, and yeah, I'm gonna publish my own take, and yeah, I don't know. Don't forget to leave a like. Make sure to comment, and if you like what you're seeing, subscribe. I do this because I like markets and I like sharing information, and there's not that many people that I can talk with about all these topics that can't actually understand what I'm talking about. So yeah, that was it. I hope you guys are good. Take care.